Good everyone. You are welcome to today's Wednesday London Payout with IOC. So today we have had the market run nicely throughout last week, and I believe we were all enjoying this move here from this low down to here. It was a very nice one. So from the Euro USD to the GBP USD, we are all long as at last week. So today I'm going to be focusing on the Euro USD because the GBP USD it actually requires some more advanced techniques to actually trade them right now, and I want to make everything simple for you. So I'll be focusing on the Euro USD and the CAD JPY. So like I said, the GBP USD, if you are monitoring it, you are going to know that we experienced this rally in price. We experienced this rally in price, and you did not see the rally in the Euro USD. Does not mean that it was just random. No. If you check the Euro GBP, there is a correlation between Euro USD, GBP USD, and the Euro GBP. As at this time that this was weak, the GBP USD was experiencing that level of accumulation, which is a manipulation technique by the market makers. So I want us to focus on the Euro USD and the CAD JPY. So first of all, let's look at the dollar index. So the dollar index, I'm just going to be quick about it from the weekly time frame. Now, when you come into the week, you want to be very observant of how price is moving. You want to observe the weekly candles high and low. You want to observe your daily candle high and low. Why am I using this? When you come in as a day trader, you want to be able to be tracking your higher time frame candles. Now I'm specific, the weekly time frame candles and the daily time frame candles. You want to be looking at, am I seeing previous daily's high being raided? That can be a confirmation that you are bullish. Am I seeing previous daily's low being raided? That can be a confirmation that you are bearish. In the absence of any manipulation taking place. Now, I'm speaking in terms of an expansion phase, when the market is expanding. Now, if you look at here, when the market was expanding lower, this was end of manipulation candle, like we know. But look at from here, when the market was expanding lower, we are taking previous week's low, and there so forth. When we went higher, we are taking previous week's high. When we changed previous week's low, so I expect this low to be raided. Now, you don't make your analysis too complex. You want it to be simple, no matter the level you have reached, but you want it to be simple and plain for you to avoid any distraction or complication. So first of all, coming into this week, I want this week's low to be taken out by price. This is my next place. So my point of support on this time frame is this weekly high. I don't want to put any markers yet on my chart. I just want to explain it to you plain. My point of support to sell, that means the point of resistance, but my point of origin for my shorts to be validated, that means my selling to take place, I don't want to see this previous week's high being taken by price. So the whole of this range should serve as a resistance to make price to come down. So if I check on this time frame, what are the resistances I have? I have bearish order block here. So the low and the bodies of the candle. So that is why I laid it out like this. If you can see it here now, bearish order block. So I need to teach you something, that if you sell at a premium, you can cover up at a discount. If you buy at a discount, you can cover up that your buying position at a premium. So if you sold here, you can cover up at a discount here. So as the market was falling here at a discount, you cover up your selling positions in a profit and you take profit here. So this weekly order block on this time frame is our point of our retracement to fill an imbalance, and we come down to hunt the short. Our first target, this low here, the weekly low. Our next target, bullish order block here, not this candle, but this here. Then our next target, the rejection block. Next target, old low, and this finally here. So we move in terms of the PD array matrix. Stand. So that is my level for here. This is my point of origin. So that's why you saw me mark X here, because this is my point of invalidation now, X. I make everything simple so that we will not get confused. Now, we came from a premium point in the market as at here, and we fell down. Now, look at what I wrote here. To validate my short, I said ever since the high of the week has been made, that's here on Wednesday, the previous daily lows has constantly been raided. So even if I know it, my life is very busy. So when I come to the chart, I should not be so checking this and here, because believe you me, I know so many things about this market. So I don't want to be moving my eyes everywhere. I just want the clear things to just pop out from the chart for me. That's why I usually write things like this on my chart. So I said ever since the high of the week has been made, previous daily lows have been constantly raided. Now this is a confirmation that my shorts are still in place. So ever since Wednesday, you see previous daily low 1, previous daily low 2 on Friday. Now we came to make the high of the week. This was just a close range, just a close range on Monday. So previous daily low was being rated 1, previous daily low 2, previous daily low 3, then 4 before we capped the weekly low. Even last week was a very, very nice week. So we went Monday, made the high of the week. Then Tuesday, we tanked down, took a previous low, previous low, previous low, previous low. Now I am capping my range, like I told you, from this now on the weekly time frame high to low. But that is my range on the weekly time frame. My range on the daily time frame is from here to here. So this is what I'm looking as my range on the weekly time frame. My range on the weekly time frame is from here to here. So it's just a difference in the premium levels, but they are still the same thing. So this is my range on the daily level. I don't want to be putting the Fibonacci everywhere so that I will not get confused. The reason why I put this one here was to cover up my shorts at a discount. So from optimal trade entry here, even if it has not even come to the fair value gap as at this point, that's your point for liquidity first. It can also be a point that you can cover up your shorts. That's why I have this here. And also, this is our discount range for our 20-day look back. For for those of you that have learned it, is not for waste. This is our discount range for 20 days look back. So does not really mean that we will now start trading till the thing enter here. No, you keep everything in their right order. So now that you have seen it, I can take this flip off. So this is what we are working with currently. Now, our high of the week fell in line with the premium objective I'm seeing on the dollar index. So this was Thursday's high, and there is something that the master students, the day that makes 70% of the weekly range. So this is Thursday's high. That's why I'm using that one as my weekly range. So even on the 4-hour, you see something here. This is a bearish order block here. So in practical terms, for those that are not really they are not really advanced into the concept, what I am saying in practical terms is that I want this thing to move in this format. I want it to move in this format, enter into here, and then dip into there. So this is what I expect for the week. But now this is not our day trade for today. So like I told you, I'm focusing on the Euro USD and the CAD JPY for today. So one thing that is very, very important too, whether you are buying or you are selling, you need to mark out all your PD arrays. When I say your PD arrays, I'm talking about your premium discount arrays, your support and your resistances. Now, I put this here to tell me that this was a point that if I am buying this is where I will look to cap it, because of I need to align time with price. At certain times of the market, the daily range will be tired and it will do what it wants to do. At certain days in the week, the weekly range will be tired and it will reverse. You need to know that. For the fact that I said Monday to your Wednesday make the high of the week in a bearish week and the low of the week in a bullish week, does not mean that if you buy on Monday, you leave it till Friday. No. Once Monday makes the low of the week, there is a day that should make the high of the week. Once Tuesday makes the low of the week, there is a day that should make the high of the week. All these things, you align price with it. So now you have the time factor, you align price with it. Now I'm giving this now with respect to the price factor. I've taught time and price before. I'm giving this with respect to the price factor in where I should maybe cap the high of the day if I was trading as at yesterday. So I need time to align with it. So now this what I'm giving here now is still the price factor for the high of the week. I need to align time with it. Now today is Wednesday, and if we will expect anything to be the high of the week, it should be today. Understand? So if I go to my 1 hour time frame, what I'm saying now is that now this is my previous daily high. I'm going to show you something that is very, very important now. This is my previous daily high. This is my previous daily low. Now, despite the fact that I have put this as the marker, because so many persons will just maybe wait till the thing enter here and look to frame a sell or this thing. That is why this concept, in as much as I will explain what I want to do, you need to know it for yourself, because at the point it will make the modifications, the changes in the market conditions, I will know what to do and you may not know what to do, and you may be waiting for this point, and I know that it will not get to this point again. It will turn and I will enter and you're still waiting for this point and you see that the market left you. So here's what I want to explain now. Time and price is very, very important. You need to really understand it. The high of the week, we expect a bearish week now. We expect the high of the week mostly to form from Monday London session to Wednesday early New York at most. So from 12 to 2 thereabouts. Even that 12 to 2 set is even late. Understand? I readily expect something to just push this market up and this thing comes here like that to really satisfy my expectations in price. So if I come in New York session and I see that this is at this point as at early New York session, if I see that this is hanging around here as an early New York session and I have reasons to go short, I will go short from this point. I'm not expecting it to reach here because this is a weekly level. This place is a weekly level. This place is a weekly level. And we are coming from hitting a weekly support. We are coming from hitting a weekly support, and a weekly here or a daily should send this thing back down. So on a daily now, it's going to cover liquidity void. It has filled a fair value gap, going to cover liquidity void. This might be that, okay, it has filled a fair value gap. It wants to go and take out the daily high as the high of the week as quest for liquidity based on time and price and start selling down. But on a normal objective, the weekly level, here I have a mitigation block in the daily time frame. We serve as the resistance to be able to push this thing down normally. But in times whereby we are backing order flow now, one thing about order flow is that even what you think it is not strong enough, for the fact order flow is backing it, it will make it very strong and market will move in that direction. Understand? So you are seeing that market hits a monthly support, and you don't expect a daily to be able to push it back. For the fact that order flow is in line with that daily, you will see how market will just carry the price back down and break that monthly support. That's what you need to know about order flow. So for the fact that I hit a weekly resistance here by this red line here and old low here, does not really mean that I must get into a weekly resistance as at this point in the bearish order block to be able to send this thing down. It has covered a daily fair value gap, and this daily high can be the quest for liquidity it want to use and fill this imbalance and start selling down. So as at this point, I'm already late into the week. That is Wednesday. I expect that this is my first place of liquidity. Then this is the next. So in here is the next. So I want to be able to check price, what it is doing. All these points I'm talking about is above the 50% level. So it's still in premium levels. Understand? So, but ordinarily, I want it to get to here before I sell. So that is a quick one for the dollar index. The same thing going for the euro. So you see, I've already marked this week. I did all these things. So yesterday I marked this as the quest for liquidity, the draw on liquidity, which was Monday's high, and it took it and went to show me the break in market structure here to the downside. So currently now that's what I'm looking at. There is a trade that you might look to take in here as at this range to sell euro, but this is what I want you to really wait for. Is what I want you to really wait for. if it has come to New York session and the idea I gave for the dollar has not started, then you can now engage in that line. So for this main trade, I want everyone to enter here about into the 4-hour fair value gap. This is where I said I want the low of the week to be formed. Then I want it just like as I drew for the dollar, I want it to form in this format and go up like this. So this is what I expect for the euro. So whatever it's doing now, you can under quest for liquidity, Asian high. Asian high is here. So it can look at that one as a quest for liquidity before it can go and take this previous daily slow. So if you are selling here, so if you are selling, if you are selling here, this is your first draw on liquidity. Understand? So can you hear me? Is anyone hearing me?
Yes, I can hear you, sir.
Okay, so if you are selling here, that means this is actually a B setup. A B setup, not the main one I want to take for the week. So this one currently is a B setup here. Then this is the main setup I am looking for the week. So if you are selling at this point, you know how to mitigate your risk. Understand? Don't risk the highest. So this, if now I'm giving you all these scenarios, I want this to happen. Understand? So for those that are newcomers, they really understand once I draw an arrow like this and they look for it. If you want to take it like that, let me break it down to like this. I'm saying that if this is what I expect, based on time and price, I will know if this will come out. So these two, I'm not just drawing this anyhow, but this is a draw on liquidity too. And this is also the maximum fee for the imbalance, and I buy. So either this or this, time will tell, but this is what I naturally expect. Now, let me take this off now. You have seen that. So if the market comes, but those that want to like scalp it, you can take this trade. And first of all, you take your partial here, a first partial, then maybe leave it to run here. So if we see this to take out that high, what I want to do is that once it comes down like this, you now buy and it goes up. Don't wait for the market to come down again. If this comes out for the high, which I don't see this to be able to happen. But if you see this, then you buy here. and you take profits as at that point. Now, I know that some persons might be feeling somehow in terms of, boss, I thought that you know where the market is going to and you understand what is happening. So you're not meant to be saying, if this happen, do this. If this happen, do this. That is the beginning of thinking wrong about the market. You understand? Thinking wrong about the market. You are not perfect in this marketplace. That is one thing you need to know. And yes, you understand draw on liquidity. You understand the concept the market uses to paint out the chart for you. You understand that one, no doubt about that. But your idea towards placing a buy and a sell is determinant upon what it is showing you, not what you are forcing yourself to do. Understand? There are conditions that you will just see it, and it's only one level of scenario you will have, only one. But here now, I'm giving you that based on time and price. Once I'm looking at this, I'm also correlating with the dollar. I will know if this will be the low of the week and I buy, or it will dip down to here and I buy. That is two scenarios. Then I'm telling you that this I am not seeing. But if this happens, we don't just say that, oh, we lost our trade and we go home. We say our stop loss have been hit. No, this thing, taking it here, for those that are advanced, you know that this thing has shown you SMS. So immediately you enter for a buy on the retracement. You put your stop loss at the London session low it has kept for you, okay, to be something like this, and you buy up into that region. But I don't see this coming into place in the market. All this is what keeps traders on the wrong side. You feel that to be able to confident that you know this thing, that means your trade must be right and you must not take a loss and you must know what the market is doing every time and you must win on every trade. These are things that take traders off. It is somehow to say that in order to be profitable in this market, you must think in terms of if scenarios. If this happens, then I do this. What I am saying now, if this happens, I do this. That is my edge. Understand? That is my edge. An edge is just a higher probability of one thing happening over the other. So if I'm telling myself that if this happens, I do this, that is what I will do. I don't go against it. I don't gamble. It's not gambling. If this happens, I buy. If this happens, I wait. If this happens, I sell. If this happens, I don't come into the market. Those are what makes you a professional trader. It's not, I must know what will happen. No, I will not even tell you that. And IOC will not train you to be that kind of trader. Yes, you will understand market concept and you will know why each move make the reason why it goes up and down and everything. But when you come into trade like this, at regions like this, we are now trading this. It's no longer just at a discount, and we can now say that, oh, it's a no-brainer and everybody buy. It's an A setup. You want to be trading in all the scenarios. You want to know how you act. So that is for dollar and that is for euro. So in case you really did not get what I said in this particular live trading session, I've told you that if this happens, you buy. That for those that want to scalp a little bit of sell, you can place this currently in the marketplace. As now it takes out a Shanghai, you can look to go short, and your first TP will be here. This is TP1. I'm seeing a fair value gap here. And lastly, I expect the maximum reach to be here. This is a daily fair value gap, but I want to enter into the fair value gap. I will know where will be this point with time. That is the difference now. So let me just go to the car JPY. So if you did not get all what I was saying for this particular live session, you can go to the YouTube channel. We are going to post the review there. So I've been buying the CAD JPY since 12 a.m. Understand? Someone will say that, boss, you are trading in Asia session. That was your concern. I've been buying this since 12 a.m. Why have I been doing that? Once market entered 12 a.m., 12 a.m. on the dot, that's when I placed this trade. Why did I place this trade? Now, I saw that as at this point, I expect a bearish week for the CAD JPY, no doubt about that. But the easy confluence I got was that yesterday took out Monday's high and Monday's low. It tells me end of manipulation. So I've gotten one. End of manipulation candle have been done by Tuesday daily candle. That is one. And I have not still seen the high of the week. All these things are still looking too clean for me. Understand? They are still looking too clean for me. It's still looking too clean. I want them to go and really clean out all these things. So as soon as the daily candle opened, let me enter this. So 12 a.m. So this is it. As soon as this candle opened, I entered a buy here and I put my stop loss here. So I'm already up on this trade. I will send a screenshot on the group for you to see. Okay, so this was what I am currently on the CAD JPY. And I want them to go and clean these highs. Although the Tuesday has taken all these highs a little bit. But I still want to see a far more reach into that. So that's what it is. So I'm expecting a bearish week for the CAD JPY. Where will I enter? Where should you enter rather? So if you see this low being taken out, at any point you see this low being taken out, at any point, whether it's from here, you see this low being taken out. Once it retraces here, you sell. You trade it to a premium that you like to see. You sell the CJ to go lower. So once it takes out this low, oh, sorry about that. You sell the CJ. So I'm going to post another link for question and answers. So this is what I expect for CAD JPY. So I want them to go into this fair value gap. So this is my target. Previous week's low. Now, this can be the farthest reach to the low of the week for CAD JPY. So this now I'm saying as a day trader, you will not trade all in one particular day. But this going to clear out the previous daily's high and even that the Friday's high. It can also be the end of manipulation to the upside. So don't just join me to be buying this. If you are not buying these things, just leave it and wait for the shift I'm talking about. Once that shift occurs, then you can go on to trade this. So this is the end of the live trading session. These are the setups I am waiting for, I'm eyeballing. So you can look at this in New York session. The